Hi, everybody. This is Lance from ThetaTraders.com. And today I have a Twitter member that I actually found on Twitter, obviously, or X as they call it. And this is Jim. He's at ubioptions1. Did I say that right, Jim?
Uzi options.
Uzi options, yeah. It's hard.
Like the machine gun.
There we go. We both have our New York accent. I know you're from Long Island, and I used to grow up in New York, but I kind of have a Texas New York accent, a little bit of both in there.
I hear the New York in you. Yeah, it takes a New Yorker to hear it though. Like average
Yeah,
people might not hear it.
yeah, the New Yorker comes in me when I talk to friends and people I like. So, that definitely pops up. And you're definitely one of the traders that I like to see, especially on Twitter. So definitely wanted to just talk a little bit about how our different trading strategies are, what we look for to actually make money consistently in the markets. So thanks for joining.
Oh, thanks for the invite, reaching out. By the way, is everything good with the screens? It's on my end. I see you well. I don't see myself as being as okay. It looks good.
Yeah, I think we're good. I see your screen and my screen. We could see a lot of your hair on the bottom. Not much hair on the top. I'm not trying to roast. I don't have much hair on the top either, but I think we're good on that.
Now I'm not currently sharing my trading screen or anything, am I?
No, not
Oh,
yet, but we'll set that up shortly, okay? And then we'll record it on a
yeah, no
video.
worries. I just wasn't sure if that was on there yet. Okay.
All right. All right. So Jim, you just want to tell me a little bit about your background in trading. I know you've been trading for a long time. Maybe a little bit about your history, some of the ups and downs you might have had while trading in this long time period.
Well, that's in a nutshell is ups and downs for sure.
Yeah.
So I got into trading back well, my first trades, if you want to call them that, were like penny stock buys in the 80s. And like everybody else, you lose all your money in penny stocks. Um, but in the 90s, I got into it in a more serious note. And I began doing, believe it or not, options. And I was able to do options on a part-time basis while I was running a business I had started. So it was great because I would put my orders in at lunchtime while I'm, on a break or something while I was out, and then it wasn't a raging bull market in the mid '90s, but it was still an uptrend, and not everything worked, but I did pretty well, just going along. And it was only calls. It wasn't puts or anything. It was just long calls.
Remind me asking if you remember how much were commissions back in the 90s on options? They're probably pretty expensive, right?
You know, yes, it was, but for the life of me, there's so many areas back then that I just don't remember. Like I know I was using companies that are no longer in business. But one I did get hooked up quickly was like TD Waterhouse, which later became TD Ameritrade and is now bought by Schwab. And I mean, so many companies got swallowed up by others, but TD Waterhouse was the first one I signed up and got an account with to do options, and it was great. But back then, to do a trade on options, you actually had if you had a smartphone, which we did, you had to use the keypad,
Yeah.
and each number was a letter. Like ABC was like
Yeah.
number one. So you
Yeah.
actually had to do each each button on the phone as a corresponding letter to put in the symbol. It was so archaic.
It was that T9 word. Remember that on those phones where you had to press like one, two, three? Yeah,
Yeah,
that was
yeah,
awesome.
yeah, yeah, yeah. So I mean, it was just crazy back then. Um, but to your question, yeah, the commissions were probably, if I had to guess, maybe $15 or $18 a trade or something like that. Because I know when I began day trading full time, which was 1998, and it was stocks. I mean, the commissions then were like $23 per
Yeah.
trade per side. So it was very expensive. But so I started with options, calls in the beginning. Did okay. I wasn't trying to make a living with it. I was just trying to make some extra income. And it was a hobby, I guess, at the time. And I was always intrigued by the market, though. I always wanted to do something, if I could, full time with trading. So I spent my off hours when I was running my business to just educating myself as much as I could on what makes stocks move, how options work against versus the stocks, how the options on those stocks move. I read everything I could back in the day, which there wasn't a lot, and there certainly was not Google and the internet and YouTube. So
Yeah.
it was limited resources, but there was enough resources to get your feet wet, and your brain thinking.
Ah,
Yeah, so Peter Lynch was one of my first books. How to Make Money in Stocks, I think it was. I got it in my study, in my library. I got them all because I'll never throw them out because that's how I cut my teeth was with those first books.
yep. When I was a kid, I was growing up in New Rochelle, the suburbs of New York City, and my mom would live and work in Con Edison, the electric company.
Oh yeah,
I think they go out to Long Island too. And
they
back
do.
then in the 80s, we could buy ED stock for no commissions. And this was the mid 80s.
Oh,
So,
direct from the
so
company,
as
right?
yeah, as a kid, my mom was like, "Yeah, we got to buy this because there's no commissions, and the commissions will definitely eat up most of your profits anyway." So even back in the 80s, I was buying ED stock, and my mom actually has a pension with ED, and she's living off dividends on ED stock even today, which is pretty amazing. So
Yeah.
it was a great opening story to see the world of options back then. I know there was a lot of different companies back in the 90s and early 2000s. Scott Trade, I think, was one of them. And
Scottrade, yes,
it,
yes, very
it
good.
was,
Scottrade was one of them. First Trade was another one. I mean, so many names that had, but Scottrade, I remember when they got bought out. Some of these kind of went out of business because of they just couldn't compete. But a lot of them were gobbled up by the bigger companies that saw that they were gaining market share of
right.
clients, traders.
I see. I know you use a lot of Thinkorswim, which was initially TD Ameritrade into Schwab into whatever it was beforehand. What do you think about the merger that happened in the last few months?
I was sad to hear that it was going to happen because I've been with TD Ameritrade, Thinkorswim for the longest time. And I thought there might be some issues going over to Schwab as far as losing customer support, which was top notch with Thinkorswim. You could get a
Right,
guy there was a level 3 specialist, futures and options guy, and
right,
they were trading 20, 30 years themselves, so they knew what you're talking about. Schwab, I found before I found it, but it's kind of fixed itself now. But I used to call there sometimes after the merger, and I'd get somebody answering the phone, and they were just not like barely even a broker, like just barely if they read a
yeah,
license. And then you got to ask, can I get a level specialist like level 2 or level 3? But
right,
to answer your question in more detail, I think it's gotten better. I think they realized that they weren't doing it as running a tight ship like Thinkorswim was, so they've gotten better. I'm good with it now. They lowered my commissions, which was one of my main concerns because Schwab. To make a long story short, I had an account with Schwab already. So when
yeah,
my other accounts, because I didn't want to keep too much in one place as far as
right,
funds. So, but when I learned about it, I'm like, they're going to be moving TD Ameritrade over to Schwab now. Um, I was concerned how that would all work and how I'm going to be able to trade between different accounts. But they made it pretty easy. If I just got to toggle,
yeah,
actually, I don't have to toggle anymore. I was toggling in the past. Now I just have two computers running, and you can run two different versions. Not versions. You can run Thinkorswim on different computers,
yeah.
and just keep each one logged into whatever account you want. And then if you still need to trade accounts, like I do have about 4 or 5 accounts there, I can just toggle quickly right in between each one and get to the account you want to place to trade it.
Right. I know it was about 4 or 5 years ago. I had a Roth IRA at Vanguard. My wife has a Roth IRA at Vanguard. And then I decided to go into option trading for my Roth IRA. And I switched from Vanguard to Schwab. So I've had a Schwab Roth IRA for a while. And, the user interface is okay in Schwab. I use what was it called? It was
Market
active. Yeah, Schwab had this other program. I forgot the
or
name.
something. Straight
Yeah, they actually had walk limit orders. It's where you could put in an order for, let's say the option's at point 0.3. You could set the option at point 0.4 and then walk limit down 0.01 until it got filled. This
Okay.
is awesome. Street something pro. I don't remember.
Street Smart Edge. Yeah,
Smart
that's
Edge. There we go. Yeah. I actually had that on my computer at school, and then of course my school blocked it because they don't like all these extra programs. So
yeah. Yeah,
so when I went into Schwab into Thinkorswim, I had a separate Thinkorswim account, and then the merger happens. And I don't know if you noticed, but the margin requirements on futures dramatically went up, and
yeah.
they went up a little bit before the merger, like they were getting ready for it, and then after the merger went up again. So as it is right now, a lot of the buying power you need for futures options, especially, are quite a bit higher than they were in the past. And we're not even talking that far in the past, like 6 months, a year ago.
Yeah, you're 100% right. I'm new to futures per se, futures on options, but I did notice the difference, and I do have friends, colleagues, and I think you mentioned it too. Your margin requirements for futures traders, futures on options, is so much less than what I have to, what my what the collateral is when I do the same trade on Thinkorswim with Schwab. It's sometimes for the same trade it could be $2,000 or $3,000 more
Right.
in buying power requirement. So
Right.
I'm not happy about that. But I'm going to wait, I believe, until I move up. I want to move another large account over to Tasty
Yeah,
because
Tasty's rate does have quite a bit lower margin requirements, at least right now in end of July 2024. Obviously, if you're watching this video and a few years from now, it could change. But as it is now, it's almost half. Like if you do a strangle on ES, we're looking at $5,000, $6,000 typically, but on Thinkorswim, it's going to be a few thousand more. So that definitely ends up being one of the factors to actually switch. Thinkorswim can still work in very large accounts if you're doing, ES and other large commodities on futures. The commissions compared to how much you can make on the trade is not going to be that much of a difference in the end. But if you're doing smaller accounts like MES and other smaller commodities, it could make a pretty big difference, I think.
definitely. I mean, if you have portfolio margin, like I said, if you have a small account, it's going to make a big difference. If you have a
Right.
large account, the portfolio margin probably would correct that for you. But what is it, 175,000? I think you have to have
Yeah, about that. Yeah.
before you can get into portfolio margin. So, but I'm okay right now with Thinkorswim. But if they start to, if they start to have more incidences of problems with the software or glitches, I'll think about relocating. But
Yep.
for now, it's working. I'm not happy, but it's working.
And another thing for viewers to notice, if you're doing quite a few trades on Thinkorswim or any brokerage, you should ask for lower commissions on your trades. They're not necessarily going to take it right away, but if you're doing a pretty large volume of trades, they will lower your commissions. Just like any other big company. If they notice that you're doing a lot of trades and you're thinking about moving to another brokerage, they want to keep your business. So they're going to want to keep you in there, and they'll usually lower your commissions. I got Thinkorswim down to I think 50 cents per stock option contract. Now, they haven't buzzed on the futures, but they buzzed on the stocks. So that was one thing.
Yeah, 100%, man. You're 100% right. If you just call up and negotiate, you tell them I'm thinking about moving. They do want to see the volume you do put out every month, but generally they'll work with you somewhat. I did call a few times with Schwab, and I've got it lowered down to on my options. It's okay. I mean, I would like to be down to 35 cents per contract. I'm paying 45 cents a contract, which it's fine. It was started at 65, 55, 50. And I'll call them again in another month or two and try to see if I can get down to 40 or 35.
Yeah,
It is
exactly.
what it is. If you're doing I was doing a lot of spreads, 20, 30 contract spreads, and it
Yeah.
was getting very expensive.
Oh yeah.
So I started to look around, maybe Robinhood, maybe a place called Tradier Brokerage. I opened a small account, Tradier Brokerage, just to get a feel for the platform. But I've also modified my strategy somewhat. So I'm doing less volume, but bringing in the same amount of premium just by changing some strategies around. So my costs are lower, which is good because it was getting very expensive.
Sounds good. Do you want to mention a little bit about your favorite current trading strategies that you're doing? If you want, you can share your screen and look a little bit about the different strategies that you look at.
Yeah. So my bread and butter, well, I shouldn't say I have really a bread and butter. I do a lot of varieties, but if I had to say my go-to is naked puts or strangles.
Mhm.
It does require higher than normal buying power than spreads, for sure, or even butterflies. It requires, well, butterflies are usually debits, but it requires a lot. But if you can put on a good position and close it at 50% profit, you can reinvest that, reallocate that money pretty quickly into another position. Those are my go-tos. I
Mhm.
did fall in love with 112s. Now
Mhm.
I know a lot of traders like yourself, professional futures traders, use that type of a trade. And while some might say you don't really want to use that on a stock trade, I've been finding success with it. Not
Yeah.
the same type of returns you would get with a futures options trade, but it's good enough to be worthwhile, I find. Especially if you want to limit your downside. If you do a put 112. you're limiting your downside as far as, or taking advantage, I should say, of the downside if it happens, and then still being able to bring in a premium, which is nice.
Yeah, definitely. If you're going to do that on a stock and you're willing to get a sign on those naked puts,
Right.
doing the 112 is a good way to go because you're getting that premium on the debit spread, the 1-1 part of the 112, and then you're lowering your cost basis. So if you're willing to sell 2 puts at a good strike price where you're happy at getting assignment on the stock, it could be a good way to go to just get a sign and then sell calls, do the wheel type strategy, covered strangles, and other ones like that.
That's it. That's the secret. And I've been using them a lot in my trading on my earnings trades. I happen to love it because, especially lately, we're having some moves, some outsized moves, and if it does fall, you'll be able to make the profit on the debit spreads portion of it. And then, like Lance just said, as long as you're willing to take possession of those, 1 or 2 of those puts down below, it can turn into a nice situation where you book profits on the debit spread, and now you're going to be able to wheel those naked puts. And what I've also been experimenting with is not just selling those 2 naked puts at the same strike. Sometimes I'll stagger them just in case it really makes an outsized move. I'm actually averaging down if I get filled on both.
Yeah. Do you look at previous earning reports and then sell puts below it? I've used stuff on optionslam.com occasionally where I'll purposely look at the previous data of the expected move or the earnings moves and then sell them away from that. Have you done anything like that before?
I have my checklist for earnings trades, which I think you mentioned. I started an earnings trade service, and what I do is I put the stocks. I'll narrow down the stocks that I feel I'd like to play, and I'll look at a lot of different factors. There's like a 7 to 10 criteria that has to pass to get into the trade to become an actual trade that I send out, and I actually take the trades with my group. So I don't just send out trades and hope for the best for them. I put myself in those positions first. I get the fill. I send a copy, not a copy. I take a picture of my fill and put it in with the trade order to them, so they see I'm in the trade too. My skin's in the game. But what I've done is I've come up with a list of things that the stock has to meet the criteria, and if it doesn't meet it, I don't take the trade. I'm not going to. Try to remove all the gambling out of the aspect. But what I do take into consideration, something you just mentioned, Lance, is previous moves and the current expected move. That all does have a factor in the equation, but it's not the only thing. It's one of, let's say, 7 or 10 things. And there's so much. There are so many sites that are fee-based that you can use to check that. Or I'll be honest, I love doing it with just my naked eye. I'll look at a chart.
Yep.
With Thinkorswim, yeah, you can pull up all the previous. You can go back, 10 years, let's say, of daily bars, and not that I go back 10 years, but you can look back and you can get a visual on how much does it really move. Check it yourself. I check a number, let's say, 10 or so previous earnings, get an average and see what's the likelihood of it making that same type of a move. So it's a lot that goes into it, but I got to say, if you have a process, you can remove a lot of the gamble out of it. And but what you mentioned is definitely something that you take into consideration for an earnings trade.
Right. When you're doing your earnings trades, you have set target profits or stop loss. Obviously, if the move happens quite a bit, like after earnings, you might close it the day after, or are there certain things that you look for, like for profits and loss?
Yeah. So if it's a strangle and this stock opens up the next day or that morning, whatever the case is, and it didn't move much, and both sides can be closed at 50% or more, boom, I take them right off.
Yeah.
If the stock moved up, let's say, in a strangle position, and so the put side can be taken off at 50% or greater, that comes right off. And then I'll let the stock trade still, even though I'm short that call and the stock's gone up. I'll let the stock trade a little bit, and if it feels like it's going to run through, I'll close that for break even or 2x loss. Knock on wood, this season so far, this earnings season, which is in week 3, we've closed no trades have been closed for losses. We got about 24 trades, 17 winners, two being managed, and 5 open. So doing something right so far.
Yeah.
Lost my screen. But as far as managing the losers, that's the trick. So definitely, you gotta try to get out. If you're wrong, don't. It's okay to be wrong, but not okay to stay wrong.
Right.
So 2x, 3x tops is the max loss.
Right. A lot of what we're doing is looking at high implied volatility before the trade because we don't know what's going to happen with the stock before earnings. And when the earnings come out, you see that IV crisp happen. The implied volatility will drop quite a bit. And you can do pretty well on positions even when the volatility drops, even if it goes against us. So let's say the earnings come out like Microsoft and they made 20 something billion dollars, but their wording in the earnings reports showing that it's not looking as good as it could be in AI. However, the implied volatility could drop so much that you could still win on the downside, even though the stock dropped quite a bit.
Right, and like you've said, or we've talked in the past, maybe through texting, it's not necessarily the news that comes out; it's the reaction to the news, which is the most important thing. Because, like you said, they can say great things, but if the market doesn't believe them, or if the market says that's not going to be good enough, you got to go with what you see, not with what you think is going to happen for sure.
Definitely agree with all that. What are some of the mistakes that you might see some newer traders or even veteran traders make? And or what are some ways that you could help fix those mistakes that they see?
Well, one that I had to overcome, so I can definitely say this is probably one that most people experience, because we're all kind of the same. Human nature is the same. Is we don't want to admit to ourselves sometimes that we're wrong in the trade, and that stubbornness or that big-headedness is gonna be a really big, expensive learning process. So, if when I talk to people that are newbies, or they're asking for guidance, or what do I do? The best thing is, if you're not sure, just to get out of that position. Don't hope. Don't try to think it's going to come back. I'm guilty of that myself. I've done it in the past, and every now and then I still do it. So I'm not going to lie. Transparency, we're all human, and so that's part of our makeup. We want to be right, but the problem with that is you're not right sometimes, and you got to realize to get out. So I just tell traders, listen, you can always get back in. Get out, reevaluate from an unemotional standpoint. I like to say, get up to 30,000 feet. Look at it from a better perspective, like you're in a plane. What does it really look like? And then you can always get back in. I did that today. Matter of fact, I was in a trade. I was in a position, symbol EXAS. I've been in it since maybe 2 months, and I put a January put up. So I was far enough out of time. I had time on my side, and I was slightly profitable. But it took in 2 months. I was only slightly profitable. So they had earnings today, and I said, you know what, I think I'm right, but it hasn't moved to the point where I can take it off. So I'm only up like 10%. My goal was 40%, 30 to 40%. So I said, you know what, they gotta have earnings. Instead of being right and holding on to that position, and if they had poor earnings, it's going to crumble, and I'm gonna hate myself and think wish I didn't hold on to it. So I closed it, and sure enough, they had good earnings and they went up 5 points. But I'll get back in. So you just got to get out, reevaluate, and then you can always get back in.
Right. I see a lot of traders that will think that they have to be right, and in order to be right, they stay in the trades longer than they probably should be. One of the keys I've noticed is to know exactly what you're going to be getting in and out of. Look at your set target profit, look at your stop loss, and then if it hits the stop loss, you got to get out of it. And just being mechanical about it. Don't overthink it. Don't try to hope that it's going to come back to a certain number, because that's usually when you're going to really hurt your accounts and blow them up at some point.
No doubt. Good point, Lance. And you said something before, if you don't mind me backing up a second.
Yeah.
You said earnings are we're playing the IV crush.
Mm-hmm.
And some traders out there, a lot of them, and a lot of good traders, they say, I don't trade earnings. I'll never trade earnings. You got to be a gambler to trade earnings. And I say to that this. Here's what I say to that. Not that you're wrong, not that you're right, but here's the thing. With a binary event like earnings, we know that there is news coming out, let's say this afternoon or tomorrow morning. We know that. So that removes the unexpected event. Now, you could be in a position, whether it's a semi or a tech stock, and they drop news overnight, not earnings. I'm talking about just any old day. They're not earnings are out of the way. You're in a position, and they drop bad news for some reason, or like with CrowdStrike. They have an update and it goes haywire. And now you're talking about IV rocket. So IV will now all of a sudden skyrocket. So now you weren't ready for that binary event, but it showed up on your door, and you have nothing to do. You don't know what's coming. At least with earnings trades, you know this event's coming. You know that it's gonna make a move. Yeah,
Right.
I think, to be honest with you, you're better prepared because you know this is gonna they're gonna come out. You don't know what the news is gonna be, good or bad, but you still know that this is a binary event, and you're gonna get an IV crush the next day, most likely to some degree.
Right.
And you can prepare for that. So you can remove a lot of the gamble out, as long as you're not swinging for the fences. And I tell my traders all the time, we're not going to swing for the fences. You know, we're not going to be putting on Hail Marys, 100 lots and you know, I'm going to make $1,000 today. This is a slow and steady snail game, little bits and pieces. And if you can take a small loss if you have one, so be it. But yeah, no, I beg to differ with the the thought that it's gambling because it's earnings. You don't know what's going to happen. But you know what? You can wake up tomorrow and bad news hits your stock, and there's your binary event. You know what I'm saying?
Yeah, exactly. Is there a certain advice that you give or something that you do in terms of allocation size, like how much of your total account you're going to use for earnings trades, for instance?
I don't have a set rule, but what I have been finding is that most of the and by the way, when I design a trade, I design it based upon one contract or one lot. So if it's a 112, it's 112. It's not 228, 224, or 448. If a trader wants to do that on his own, I tell them all the time, if you have a large account and you want to size this up, that's on you. But this is based on a one contract or a one, a one. It's a one. So based on that factor, I've been noticing most of the trades I've been devising are using about no more than $5,000 or $6,000. So I didn't come up with that as being the amount that I would like to risk. It's just that I'm putting on some safe trades, and that's really the max amount of buying power that they really utilize.
Yeah. And you're not going to use all that buying power, even if the earnings dramatically decrease or increase. You're not necessarily going to hit the max loss, especially if you have a lot of time left in the option. You're going to have some time value in there, so you could easily get out of the trade if you needed to.
Right, and that's another good point, man. So I devise trades so Monday through Friday, right? So it's a different trade if I take into account the day of the week. Because if it's a Monday, I know I've got 4 more days that trade has to work for me or can work against me. If it's a Friday morning earnings release, I know that option it's done in 8 hours, 6 hours, 6.5 hours. So it's a different, completely different, analyzing to get to that trade.
Right. Do you usually use more defined risk trades like iron condors or undefined like strangles?
I'd have to look at the spreadsheet. Off the top of my head, the majority have been strangles and 112s.
Okay.
A couple of long iron condors,
Okay.
a couple of credit spreads, either put or call debit spread, credit spreads. No butterflies. Yeah, that's pretty much. So I have to say it's a toss up between strangles and 112s. I really do love the 112s.
Yep. Yeah, I see you're doing other trades. Did one on lean hogs recently. I did one when Nathan's hot dogs on July 4th happened, and I know we're talking about it as well. So there's other commodities that don't necessarily have earnings as well. Is there certain ways that you manage those? Take profit, stop loss, and whatnot?
It's funny. I think it was after you posted some pictures of being in New York, when I put that lean cattle trade on.
Right.
Yeah, if it's a strangle, like I did have a strangle on. Well, actually, I've had the euro. I've had a strangle on. I'm looking over at the screen. Gold was a 111. You and I had a nice conversation one time. You told me there was some call skew one day we were talking.
Right.
And so I looked, you know what, that's a good idea. Let me look at the call side of things. And I put a 111 on the call on the gold on the call side. 111. I closed that out at 80%. So if I'm doing a strangle on futures options, I think it's kind of, I don't know if it's commonplace in the options world, but in the futures world, but I take it off at 50%. If it comes quick. If not, if it takes a little bit longer and I'm feeling safe in the position, I'll let it go a little more, maybe to 60 or 70%. But I have no problem booking it at 50% and getting out and starting on a new one, because I've learned if you give it too much room, sometimes it turns right around like that.
Yeah, sometimes I'll look at the amount of days in trade before I start a trade. Let's say I'm in a trade for 90 days out, and then it makes 50% profit in under 50% of the trading time.
Yeah.
So let's say I hit 50% profit in about 20 or 30 days. At that point, you're making enough or more per day than you would have when you first started the trade. So at that point, it could make sense to take it off, especially since you're getting a higher return than what you agreed on when you actually started the trade as well.
Oh, definitely. Yeah, I've seen some of your posts when you put on Twitter how that works out. I mean, you couldn't ask for better result than that.
Yeah.
But yeah, pretty much I try to manage the futures on options trades similar to the to my stocks. Although I don't know, maybe it's just because I've always heard when I was younger that futures will put you in the poorhouse. I used to know a guy. He was an oil futures trader, and he did great. I mean, the guy had a beautiful home, he had beautiful cars and everything. And then one day I saw him, and he was down on his luck. And what happened was he got on the wrong side. And back in the 90s, I think it was, yeah, um, I think he got wiped out. So that kind of stuck in the back of my mind, with futures, especially. But I know I'm doing futures on options, so it's options on futures, so it's not really the same as trading in the pit or doing futures.
Right. Do you usually leave a large amount of cash available for futures? Because you're doing some stock trades based on earnings, and then you'll also do some futures trades. It's hard to coincide both of those in the same account. I know you have a lot of accounts. Do you designate like one account for futures and one account for stocks?
I don't, and I will. I haven't. I know I shouldn't, and I just have it all in one account. Thankfully, my margin, I'm good. Yeah, I mean, it's not a huge account. It's a nice size account, so I don't run into any issues with that so far. I do
Right.
make sure I have about 30 to 40% cash on hand at all times, just in case. Just
Yeah.
in, yeah.
It's a good idea, especially with futures when you're working with span margin. A lot of those buying power requirements could change very drastically. In the last few weeks, just on ES, the margin requirements went up like almost 10% on my buying power. So what I would recommend is to have two separate accounts, have one for just futures and then one for just stocks. So it's a little easier to designate where your buying power is going on both of those. And also, have you looked into futures for Thinkorswim? You can buy T-bills of your excess cash. Have you ever looked into doing any of those fixed income instruments on it?
I spoke to them about what I can do with my unused cash, and they do. I think now this is at Schwab now, and I don't know if the guy I spoke to was really well informed, but he said that they have a mutual fund. I don't know what it is. I have the symbol written out somewhere. You can put the money in excess money into a mutual fund, which is
Yeah.
completely liquid.
Yeah.
You get after 30 days, you have access to 90 or 95% of it to use for however you want, spreads, strangles, whatever you want to do.
Right.
And you'll earn the highest percent is about 5 and change, 5 point something.
Right.
I think
It's probably SVXXX or something of that sort, where it's a Schwab money market account. That's definitely one that I need to research more into. You could also look into buying T-bills, and you could do that directly from TD Ameritrade or Schwab.com, where it uses a very low percent of your buying power, and it also is able to access the excess cash pretty quickly. I think it's within a day. I know it used to be T+2, but now I think it's T+1, where options settle. I personally use BIL. That's a very short term, like 1 to 3 month T-bill ETF, where it uses a very small percent of your buying power. So that's definitely some things to look at for excess cash, because you might as well get your 5%, on that excess cash you're just waiting on.
Yeah, I know that you have that ability to do that with Tasty, right? They offer the
Yeah.
bill. Yeah, they don't offer that with TD Ameritrade, with Schwab, but I believe I can do what you just said though, was buy some T-bills and then get some liquidity off of that. That's
Right.
like I said, I have two decent sized accounts at Schwab, so I could just take one of them, designate, clear it out with the stocks, or maybe even transfer it over to the other account that's already there, and
Right.
then keep the other one that's there, to do the futures trade.
Yeah, especially with markets possibly going down in terms of the interest rates, because September might look like a 0.25 drop. Could be a good idea to go a little bit longer on the T-bill expirations, go a year or 2 years out, possibly, so you get those 5% interest and lock it in, especially if you're not worried about too much about the short-term moves on the bills, because obviously if the interest rates go down, the actual value of your bills will go up, will change as well. However, if you're willing to just go to expiration on it, you'll still be okay, and you're just getting that return that you're looking for when you first started the trade.
Yeah, great bit of information for traders out there. If you're not using some of these vehicles to keep your money and earn interest, like myself, I'm not doing it yet. I'm going to, but if you're not, it's good information Lance is putting out there, because that allows the compounding process to keep going, right? So now you're making money on your money sitting, and while you're using it to trade. So it's
Exactly. Well, do you think you have any things that like scare you at night, especially in futures, where you're going to sleep, you're not really sure what's going to happen with a certain market, and then next thing you know, you wake up the next morning and something blows up and not up or the downside?
Yeah, I do. It's funny you say that, because when I was contemplating getting into the futures on options, I'm sorry, options on futures, I say, wow, orange juice. I remember years ago there used to be shortages on orange juice, or shortages on soybeans, or whatever. And I'm not going to get anywhere near those commodities, because that could be the thing that we wake up one day and there's, the prices are 3 times in the stores because there's a shortage, and now your futures position, your options position on the futures has gone wildly against you. So, yeah, I worry sometimes about the futures positions, but I'm not big enough yet that I should be worrying. I think it's just, like I said, ingrained in my brain from someone I knew who grew up in futures. But not much really keeps me up at night, unless I can't wait to close positions, like especially leading up toward a Friday when I know I have a lot of positions to close or manage.
Right.
I sometimes can't sleep because I can't wait to get to work in the morning and do my business. So I find myself thinking about the market more than I should.
Right. Yeah, I agree the same way. Once you have different positions in place and you know exactly where you are, like if you look at your P&L at the certain day and you're not anywhere near where a stop loss is, she'll be fine. Just waking up the next day, it's just being okay. And then if it happens to go against you, it does. That's just life in the end, right?
It's true. I think it's part of that need to be right on every trade that is what being perfectionism is the problem. And again, that's something that we all fight. Well, some of us fight on a regular basis, is trying to be perfect. I want to get every trade right, so they all got to be winners. There's going to be losers. This is a game of losing and winning, and keeping the losers small as you can, and letting those winners run if possible. So, but yeah, that keeps me up at night. How about you? What keeps you up?
Um, Thinking that my buying power went way higher than it probably should be, and then worrying that I have very little buying power left, or getting a margin call, even though I've never had a margin call before. I occasionally got relatively close, within 15% or so, but I don't really worry about it necessarily. It's just something that happens. So
no margin calls ever that's a good track record.
Margin calls over.
I've had a few, nothing crazy, but a few, just from either a dumb mistake or
right.
or just put myself in a position. But yeah,
Right. Definitely agree. All right, Jim. So it was great talking with you. If you look at the link in the description down below this video, you could reach Jim and look at how he does his strangles and can join his service. Any final words you'd like to mention or add?
No, but it was great talking to you as well. I've learned a lot from you, watching your videos that you're so generous to put out every week or so. You text, on Twitter, you're always generous with thoughts and sharing ideas. And so kudos to you for doing this type of interview process with, other traders, and just getting word out there on what guys are doing, how they're doing it, without giving away the farm. You know what I'm saying? A lot of good traders out there, honest people that are trying to help others. Yeah, there's a fee involved sometimes, but it's like this. If you want to learn on your own, it's there's a fee for that. You gotta learn on your own and lose maybe more than you would have to if you just go with someone like Lance's service, or mine, and just get your feet wet, see if you like it. If it is, you can stick with it, and if not, it's no harm, no foul. But yeah, thanks for having me. Appreciate that. I'm happy to do it again if it's something that comes up. I'll do it again. Yeah.
All right, sounds good. Yeah, I definitely agree. A lot of what we're doing is not necessarily just following the trades that we do, but learning the reasons why we do the trades, getting that education involved to be able to do this on your own. I definitely appreciate when other people are looking at the trades that we do and I do, and then being able to put their own spin on it and seeing how it might benefit them for their risk and return preferences as well.
I do have a free trial. If you guys want to just come in for 3 days, sit in the room for free, check it out, see if it's for them. They don't have to do any trades. So if they want to hit me up on my spot, I'm more than happy to show them the ropes and see if it's something for them.
Sounds good. Again, it'll be in the link in the description down below this video if you're interested for trying it out. Jim, it was great talking with you. Appreciate all of your time and your support. And I'll see you on Twitter and on the social media space.
By the way, if they mention that they saw that they learned about my site on Lance's video, there's a special discount. So
Sounds good.
interested in that.
I definitely appreciate it. All right, Jim, have a good rest of the evening. And thanks for everybody for watching.
Nice talking with you, bud.
All right.